a strategy of the day update here for February 16th, 2023. Wanted to do a little intro to the corn, wheat, and beans we'll be talking about in more depth here in an hour's time after the close for the strategy of the week webinar. Sign up links in the information and comment section of this video. And remember, trading futures involves risk and is not suitable for all investors, and everything I talk about here today is just my own opinion and not a direct trade recommendation. But we are going to talk a little bit about what the markets are doing today, my opinions on those said price action, and the discussion of whether or not we're starting to head into technical support. Right? We've had range-bound markets, generally speaking. I think that we've seen those ranges trade into an oblivion. And today's price action is just lower lows and lower highs for corn and wheat. In the trading in a downward intraday trend into the low end of the range we've been in, and then an inside day from soybeans. Just none of these markets have done anything to convince me one way or the other right now that we should have strong conviction on a directional trade, but we certainly need to continue to watch those daily levels. So let's begin today with the March corn trading at 673 3/4 here. Not too far off of lows of the day, and those lows of the day are coming in here right around that 100-day and 200-day moving average, which is clustered around that 673 area. The 55-day moving average still below us down at 666, and the 18-day moving average now we're back below that. That's been kind of a reversion to the mean, has been that 18-day moving average up around 678. We are breaking above, or we've been attempting to break above this downward sloping trend line against the highs. The upward sloping trend line against the lows comes in as support. And both those levels cross around that 55-day moving average. So generally speaking, we're above a lot of the levels we would consider, right, to be bullish, bearish lines in the sand. But we are encapsulated in a range between 670 to 690 at this time. And we'll discuss more about, how to trade that range in today's webinar. Looking at options on both sides of a very tight trading range. Sometimes we've got a 30-cent range that we think, or a move that we think is going to happen in 30 cents in either direction. Sometimes you just buy a put and a call and hang on for a volatility ride. But we'll discuss layering into corn options for potential upside exposure, with then using futures in the near term, and then using deferred months to capture some price bands up above. All right, March futures here on the 4-hour chart, that same kind of consolidating range playing out. 2 months, 3 months worth of highs are up here around the 680 area, going back to December, January, and now February. You can see the higher lows, though, that we have formed over those 3 months, and above all those major, trend lines. Next in the series, full 50% long, or kind of the 50% range that we're trading in, and in the upper 50% band of that range there between 670 and 690. I mean, it's the same technicals, right? Back and forth and up and down in this range. There's not much going on. Every time we find support, though, down around 670, or try to get a rally back higher from there, we have gone back to test the resistance and that range high. So we're going to continue to assume that pattern could play out in the near term. Chicago wheat trading down 5.5 cents on the day. KC wheat in the March trading up 2 cents. And the Minneapolis spring contract trading up 3.25 cents. Wheat is a tale of three cities right now, or two stories really. The protein premium versus the little bit weaker Chicago contract. Now, even that being said, maybe the protein premium, in the KC and the Minneapolis spring wheat right now, perhaps that premium that's being driven in this market is the canary in the coal mine for bears, and that the notion that bulls are coming back here. Overbought conditions have been unwound on the daily RSI for the Chicago contract. We've unwound back to neutral in the daily RSI. We've pulled back here into the 18-day moving average here at 761. The 55-day we broke above. We have that golden cross the other day. We pulled back to test into that area now as support, the 760 to 750 area. I think we are finding a bottom perhaps here, or a reason to maybe be a buyer now down into this area on the wheat. It's a bit of catching a falling knife, but when we look at the KC wheat, contract, you can see we are well above all of those, price levels. Yes, we could come a little lower to test them, but generally speaking, this is a much more bullish looking trend. We unwound that daily RSI, so there's room to the upside if we want to go. And Minneapolis Spring Wheat, much the same effect here, holding above the 18-day moving average, really just consolidating up at highs. But generally speaking, a much less volatile contract at this time. I mentioned the protein premium. Let's look at that July on July spread. We were watching this pullback from a test of $1 over. Came down to test the 80 figure. Was hoping we get down to the 70s, but nevertheless, we've held support there at old highs. We're now back above that 18-day moving average. And that brings up the idea that we are still trending higher, probably towards the $110 to $120, $1.20 over. Because remember, coming forward 1 month here, the March contract is already trading at $1.33. And, if we go back on March, I think we're somewhere right around here on the March contract in July, if that makes sense. Which I expect July to follow what March did, which is rally up to $1.30 to $1.40. If that's the case, right, in this July contract, we are just starting to come back up to do, that breakout at this time. Past price action is not indicative of future, but it's a pretty good, analog to be following, right? All right, and that brings us to the 4-hour chart here for Chicago wheat. Looking at the May contract here for one client, and I think it's time we kind of shift focus to May anyway, because we're next week you're thinking of end of life and rolling these things. But the full 50% retracement down at 764, it could get there. But I've got some upward sloping trend lines that we're kind of either trading into or like at in this 774 to 770 area. And certainly, this old downward sloping trend line breaking above it, coming back to test it as support. I've got a lot of reasons right in this area to think that we're finding support. And now I just want to see that confirmation of reversal, back higher to feel more confident that the market is, in fact, going to now trade back to highs. I think the way we're seeing bull spreading in that KC Chicago spread, my favorite contract to be a buyer in is still the KC wheat. But I will say KC wheat has traded back into the full 50% retracement off that prior high, that swing high to low. Certainly breaking back above this trend line and starting this bit of a bull trend is something we're going to continue to look for at this time. But at this point, I imagine we need to push up to the 950 area. And once we do that, I would expect a full 50% retracement to potentially happen. Not that I would be a seller up there for that pullback, but after that pullback, I'd be looking, or after this rally, to take out the full 50% short, if you will, and hit their 618 lines. Buying that dip on the next pullback is kind of the trade that I'd be looking for. But we'll get more into that here in our Strategy of the Week webinar coming up in 50 minutes. Okay. And last but not least here today, soybeans, the March beans trading at 1524.5. That 18-day moving average, just the supportive area now on this chart that continues to hold. Yesterday's lows remain intact. Today is a bit of a doji. Not much can be said about this market other than a kind of upward sloping trend or diagonal. We're neither overbought nor oversold in the daily RSI, so we could break below the 18-day moving average and trade down to 1500 just as much as I think we could trade right back to 1560. Basically 30 cents in either direction, I think are up for grabs right now in our soybean contract. March beans, we talked in our yesterday's report about the 50% swing from this 1480 area up to the new high, and how that 1517, 50% long, 1516 and 3/4, whichever split in a tenth of a penny there. That 50% level held yesterday and has gotten a reaction into today. We're getting capped by 1530. Yesterday's not low, but the lows, prior day's lows, right? I wouldn't imagine a pushback up to 1540 to me would signal, I think we're putting pressure on resistance and could run the highs. And if, on that run through the highs is where we'd expect things to maybe accelerate. And if they don't, we could fall right back into the range we've been in, or at least fall back for a test of the 1540 to 1530 area as support. But that's after a much larger breakthrough up to targets. Upward sloping trend lines are still holding. 50% longs are still holding. It's a very choppy trend, but it is still 2 steps forward, 1 step back for the soybeans. One step forward would take us up towards that 1570 to 1580 upside objective and breakout of a much larger downward sloping trend line, that is running against the highs here and take us to a new contract high. And we'll take a look at, here in 50 minutes, we'll take a look at those new crop contracts to see why maybe there's some advantages to new crop positioning at this time. And certainly because of what some of the spreads are telling us, that July Nove bean contract at $1.31 over, breaking back below that 18-day moving average and really rolling over. I think we've peaked here. We've had peak inversion in our old crop, new crop. Now we're rolling back over, and we are probably going to try to look for support. And the next big psychological level and the level I'd be looking for is $1 over, and below that about 50 cents over. Pretty no-brainer to me on where we could see this market pull back to. What would that do to the outright price of beans? We'll discuss that more here at our webinar at 1:30. Thank you for joining me in today's Strategy of the Day webinar. I hope you found it informative. I always appreciate your likes and comments in the section for them below. So this has been your Strategy of the Day webinar here for February 16th. I'm Dan Hussey from Zaner AgCads. You can get in touch with me over here at 312-277-0110 to discuss your trading and execution needs. You can find me on Twitter, Facebook, and shoot me an email at dhussey@zaner.com. Have a great day, everybody. We'll talk to you in 45 minutes at the Strategy of the Week webinar, and be sure to sign up in the links in the comment section and information section of this video if you want to be a part of that webinar. Have a great day, everybody, and we'll be back with you as price action develops.